Hello, and welcome to the Family Building Society podcast, where we'll be discussing the growth in low and no deposit mortgages, how families' 100% deal differs to others available, and how the increase in high LTV mortgage options and their variations benefits the market. I'm Samantha Partington, freelance journalist for Mortgage Solutions, and today I'm joined by two of Family Building Society's mortgage experts and business development managers, Neil Cadwallader and Arif Kara. The FCA's drive for mortgage reform and its keenness for lenders to innovate has given way to positive changes in lenders' mortgage policies, and as a consequence, we've seen more low or no deposit mortgages launched. I want to come to you first, Arif. How much of a need for this innovation was there?
Oh, I mean, absolutely massive, huge, because where you got to think about if you trail back, the main difficult there's a few obstacles for the young generation getting on a property ladder, and two of the main obstacles is one is the property prices, and second is along with couple of affordability, is being able to save up a deposit because majority lenders do want at least a 5% deposit. So if you're in a situation where you're being offered products where you can put very little or no deposit at all, that will meet an unmet need in the market. Because if you're a couple first time buyer in your 20s and you're renting, and you're in London, Southeast, in a major city, it will be quite difficult. It's probably quite difficult you saving a deposit. So having a high LTV product it answers a very big unmet need in the market, and so I think it was there was a massive need, and it's good that lenders are doing it, and obviously we're doing it as well.
And what about you, Neil?
Yeah, kind of affordability pressures obviously are there, not only of kind of people that having to rent, pay the bills, a student repayment of student loans, which is kind of quite in focus in the press at the moment. The FCA are trying to um, cajole lenders into reviewing their LTIs and their kind of the multiples. Um, the only kind of thing that does happen in the background is, as we've all seen in the last like month or so, that ONS data then will go against that, and it drives down affordability. So as much as it's like giving with one hand and taking away with the other. Because of that, that's why we need these higher LTV kind of products to get people out of rented accommodation and get them onto the property ladder. Because I mean, the property market in the UK is the engine of the UK. So we do need to get people purchasing and moving home, really, to be honest.
So there are already, and there have been for some time, 100% LTV and joint borrower sole proprietor mortgages available. But earlier this year, we saw Family Building Society increase its loan to value to 100%, which was great news. How does your mortgage differ to what's already out there on the market?
I think the main thing to immediately get out there is that there are a lot of high LTV products out there. Um, and if I'm totally honest, the ability for somebody who applies for it to actually attain that mortgage with other lenders has been quite hard. I was actually talking to another BDM this morning, and he mentioned that he was at a presentation where one lender who recently actually kind of brought out a high LTV product, and less than 20% of the people actually applied for it were able to attain it, which is kind of pretty damning kind of stat. um, because as has been kind of noted by a lot of and I will say kind of that some of the products out there, you've got Santander, you've got Skipton, yeah, kind of, and there are others out there. There are quite a few different hurdles for somebody to actually jump through to actually attain that mortgage. And I think the difference with ours, especially in the family building societies, we brought at 100% lending, is that we've removed a lot of those hurdles. Um, and I always kind of say that Not going into it in too fine a detail, but it is a pure 100% mortgage. And also it has the benefit that if family members obviously need to help, they can actually do it in two ways. One way is by uh, using equity within a residential property or properties within the family kind of background, or if they want to help a member of the family without actually gifting them any money, what they can do is put it into a kind of an interest paying account with Family Building Society, and we just take a simple charge over that for 5 years. But all these, to do with these hurdles, all they need to do is keep up repayments on the mortgage, the main applicants, and then after 5 years, all of the charges are actually dispelled. And again, it's hurdles getting into and hurdles getting out of the product that we've removed. And that is a massive differential to some of the other products that are on the market at the moment.
A first time buyer coming to family then would find it much easier, smoother journey to getting that 100% mortgage because their parents or family members are putting that collateral up there as sort of extra safety net. Then that makes that easier then for that first time buyer to sort of have I suppose, a nicer experience through the mortgage journey.
Yeah, without doubt, and it kind of it takes some of the stress out of it as well, and it makes it a cleaner contract. And bear in mind, again, we're having a breadth of ages of people that are involved in this kind of process, and everybody needs to understand what's happening throughout that process. And by having a simplified product such as this, then that will actually help everybody's understanding of where they are pre and during and post the application. And it's at the end of the day, it's designed to bring family members together to get people on the property ladder.
Just a quick anecdote. In one of the areas that I look after, there's a lot of community-based brokers, and for years I've been hearing parents gifted 50k, parents gifted 100k, parents gifted 150k cash for a newly married couple to buy a property. Unfortunately, sometimes marriages don't last, and as a result of that, if you, as a parent, if you paid in 100 grand, 150 grand, and you're just giving hard cash, half of it is pretty much gone. God forbid if if the couple were to part their ways. So it's a bit of a safeguard for parents as well. We'll say, look, you can give money. We'll keep it on account for you. We'll give it back to you after 5 years, or we'll put a charge on the property. So there's no money involved. So it benefits parents in that way. And essentially they're not, because don't forget, it's not easy saving money these days, with cost of living and what the price of everything. So if we're in a situation where we're able to give parents an option where they can help their kids, but also get their money back in 5 years later with some interest, or remove the charge on the property after 5 years where they've not had to put hard cash in, I think that's a win-win for everybody.
It's a good, decent interest rate as well. I was checking out the terms and conditions of the product, and it's a competitive interest rate that they're actually getting. So there is a financial benefit there to the parents when they get that cash back, because these aren't small sums, are they? They're going to be quite substantial sums if it's 20% of the property value. So I just wanted to move us on to the final part of the podcast. I came across some interesting survey results that I wanted to get both your views on. It was a survey that came out recently from MAB, the brokerage, and I was quite shocked by some of these stats. Actually, it was 73% of renters that they'd surveyed were unaware that you could get a 95% LTV mortgage. 80% hadn't heard of a track record mortgage, and 70% were unaware of the full range of family assisted mortgages available. That's a really high level of, information that they don't know about. So, Arif, if I'll stay with you for a moment, there's a big disconnect there, isn't there? How do you think we can more effectively communicate that there are these options out there to young people?
Those numbers are staggering and a bit scary, actually. But I can understand that it's typical. You don't really know about mortgages or how the housing market until you want to buy one. So it doesn't surprise me. And And the education piece is quite important here, where we need to be educating the young generation and consumers in general, by doing a podcast like this,
Yeah.
or attending events. We go to road shows, we do roundtable events. We're on, uh, we're on online. We have an account on X, I believe. So if they follow lenders on their social media accounts, they can get mortgage updates. Education piece I think is quite important for the young generation, because what that will do, it will enable them to prepare from a younger age. If you're 18 and you know about a mortgage and you think, well, I'm 25, I want to buy a property. If you can put some money aside every month, and you'll get some interest on it every single year. By the time you're 25, 7 years later, you've got a starting point, you've got a deposit, and then a positive knock-on effect of this would be there'll be less burden, less pressure on your parents to help you.
Yeah, absolutely. And what did you think of those survey findings?
It's I suppose it bears the truth of that need for kind of knowledge, and it's quite. Yeah, I was in a large account visiting a brokerage in Bath this morning. Ended up just sat at a big table with about 3 or 4 BDMs, and we're talking about just happened to be talking about high LTV, and one of the BDMs kind of said, yeah, and also it's the fact that it's people who've applied for it now feel that they can't get these high LTVs because there's going to be. It sounds great when it's it doesn't do what it says in the tin. You've got to jump through too many hoops and that sort of stuff, and that is kind of like a negative. But the thing is, though, is that, as I said, with our particular mortgage, the family mortgage, um, that we've removed those hurdles. But the other thing I was going to mention as well, very quickly, is that you've got 100% as a family mortgage. You've also got what's called a joint borrower sole proprietor mortgage at 90%. And that is an amazing bit of kit because it's obviously it's purchased Remo as well, and it works really well with us because we have high lending ages. Because what normally happens is you've got a younger person, for whatever reason, wants to either purchase, remortgage, can't quite afford it income wise. They normally will bring on it normally is an older person, bless, that comes on to help with the income in the background. And that normally with the high street, it fails because they won't take the higher age. With us, because we can take that person in the background to 95 years of age using kind of differing assets and so forth, and pensions and investment incomes. That means that we can give the younger person a much longer term, and that's a 90% product. So there's more than one product out there that can help them get on the ladder as well.
So just to clarify with that then, so the younger person, if they were struggling to afford the mortgage just with or to pass the affordability assessment with just their own income, they can invite, for example, mum or dad or both onto that mortgage to support them should they need it. But then they don't become an owner of the property. Is that right?
That's
It's
right.
just the property is just owned by the young person, and that they just sort of sit in the background to help with the.
Yeah, that's totally it. And up to 4 applicants and 4 incomes. So if it was a joint case, that they would be the main applicants, and it could be one of their mothers and father, or so forth, family members in the background who would be helping them with affordability. But for tax status, all that type of stuff, that they're not the owners as such. But because we can boost affordability on a 90% product, it's not just the 100% product that's available for them. And that 90% product is amazingly flexible for quite a few different scenarios. And it's not just for first time buyers.
Thanks very much. Thanks, Arif. Thanks, Neil. And thanks, everybody, for listening today. And please do join us again for our final episode, where we'll be discussing the interesting and emerging trend of the bank of son and daughter.